Germany has voted, and even if many things are not yet clear, one thing is certain: the famous business as usual can and will not work. The grand coalition seems to be over, and now instead a new coalition must come together that does not fit together properly. Sounds like uncertainty, but the stock market seems unconcerned about it. Why? We will clarify now. And these are the topics in our Werthstein Index update. What is the risk for the stock markets of the new political situation in Berlin? And will anything concrete emerge from the reappearance in the US of Trumponomics? As always, there are opportunities and risks on the stock markets. Let's see how our experts will vote in the new Werthstein Index.
Summer, sun, beach and sea. A dream recipe for chilling out on the Caribbean island of Jamaica. Not just a favourite destination for Europeans in winter, but now also the subject of talks about forming a coalition out of the CDU and CSU, the FDP and the Greens. On that front, so far, not a trace of relaxation. Capping immigration, climate protection, tax policy, domestic security and policy on Europe. There's a long list of seemingly insurmountable obstacles. Jamaica attracts tourists with temperatures of around 30 degrees Celsius, but politics in Berlin look set for a long, cold winter.
One thing is clear: Merkel, Seehofer, Lindner and Özdemir will not be able to take advantage of an early booking discount for a holiday in the Caribbean. But when will they buy the ticket for the last-minute trip to Jamaica? Let's ask the experts of the Werthstein Institute.
Well, I think in the end it will be a Jamaican coalition, but probably it will take longer than the old record to get there.
It'll be Jamaica, there's no alternative. We have to be governed, but in Xavier Naidoo's words, it won't be easy. It'll be a hard and rocky road. Probably they won't agree on a new government until spring 2018, which isn't very positive, but in the end at least we'll be able to say we've got a government.
I also think we will end up with that Jamaica coalition. And it could take a good 2 months to get there, but I think they'll get there before Christmas, and I think it will just about survive.
The result is clear: the path is wide, but it leads to Jamaica. So we ask Martin Lück, Chief Investment Strategist with the world's largest asset manager Blackrock, who is with us today. Good afternoon to Frankfurt.
Hello, Stefan Grüße.
Mr. Lück, what are the chances of a black-yellow-green coalition in the German government?
That's with a large degree of uncertainty, certainly the biggest or the highest likelihood that we have. All other scenarios, including a return of the Social Democrats to this negotiation table and a minority government or even a new election, would be by far worse outcomes, also from the perspective of financial markets.
That sounds like a lot of uncertainty, which is never a good thing on the stock markets. But the share prices continue to run. The DAX is on a new all-time high. What risk do you see as someone whose clients trust you with so much money?
There are undoubtedly a number of risks out there, including the political risk now also emanating from the German political environment. However, in a situation of a very good macro data, usually volatility is very low. So spikes in volatility usually come down very swiftly, which means that in a longer term perspective, markets tend to see this environment in a rather relaxed fashion.
Thank you, Martin Lück. We will come back to you later. But now to Robert Halver, capital market analyst from the Baader Bank. Martin Lück spoke about serenity regarding politics, as well as the right receipt for you.
As regards German politics in 2017, stock markets aren't perturbed because people are saying no change. Mrs. Merkel is there, a constant. And at least the FDP and the Greens stand for reforms in digitization and education. You could of course also argue that the last grand coalition was about as ready for reforms as Cologne Cathedral. So this is really a good opportunity for a new government. However, the longer it takes to form one, the worse it will get.
But what is driving the German stock market in the meantime?
If Trump succeeds in cutting taxes, even if they're partly imaginary, it'll be a good thing. Good news for German companies operating in America too, because they'll be able to earn more. And besides that, the current monetary policy remains the faithful companion of stock markets, first of all in America, and doesn't really hurt. And in Europe it won't hurt Mr. Draghi at all. He needs all the support he can get to get inflation moving, and bearing in mind that the euro is also getting weaker, you can say that conditions for German equities are excellent. Despite overvaluation, the bond market is no alternative, so stay with shares.
And so, to Paris, to Valérie Planiol, weak euro or rather a strong dollar, what's your view on that?
Well, it is a bit of a weak euro after the German election and the recent independence referendum in Catalonia. But a lot comes from the dollar, which has really been strengthening in the past weeks over several good factors coming in, especially now the renewed expectation of a Fed rate hike and also a seemingly agreement between China and the US over sanctions to North Korea. But of course, the bigger thing is the reform coming up in the tax system in the US and the renewed promise by the Trump administration that they will come through.
Okay, speaking about the tax reform, which effects do you expect for the US economy? More than just higher budget deficit?
Well, the Trump administration promises up to $2 trillion worth of new money into the US economy. And I think in the end, the Grand Old Party will come up with some kind of income tax reductions for the economy. So with this not being balanced by any spending cuts, I think this is going to be a major shot in the arm in the US economy, which is already running at full potential.
And so to Giles Keating, who was very optimistic about the Trumponomics a year ago, is Trump now back on track?
He's not fully back on track, but he does have a chance of getting something through the Congress. What he wants are big tax cuts both for individuals and for companies, but that would mean a big increase in the deficit, and there's a lot of resistance to that. So I think he'll get something smaller. He'll get a corporate tax cut through. And this is coming at a time when the economy is already surging forward. We've just seen that in the business surveys out of the United States, as well as in Europe and China and Japan. So I think that combination of some unfunded tax cuts in the US with a strong economy means that interest rates will go up that little bit more.
Thanks, Giles Keating. Now to the current Werthstein Index, which reflects the market's opinion of the Werthstein Institute. It expresses the expectation of the development of the global equity markets for the coming 3 months.
Well, I'm very cautious. I think at this point the tax debate may really linger in the US, and also even if we get a tax reduction, I think the rise in the bond yields may outpace the benefit from those new incomes coming in. So in the end, I stick to my vote of 3.
My vote for shares is 8. Why so positive? True, there are crises and conflicts, but investors have developed such thick skins that they hardly feel the pain anymore.
So Valerie is staying as the voice of caution. Robert is a lot more optimistic here. Well, my own vote does also go up from a 3, but only to a 5. If we put that together, that's 16, which gives an average of 5.3, which is the highest so far this year, capturing some of the optimism with the world economy moving ahead and with that tax reform coming through. But it's still saying there are some potential pitfalls ahead.
From 3.7 to 5.3, a decent leap in the Werthstein Index. We ask again Martin Lück from Blackrock. Do you share the optimism?
I do indeed. I think the glass is rather half full than half empty, so I would even top it up to some 6 or something like that.
Where do you see the current stock market drivers?
I think it's basically the very positive growth environment that we see around the world, in the Americas, in Asia, and also in Europe. So that is now being transported into larger earnings growth in all these regions, and that of course is driving prices.
That all sounds very positive. Cautious optimism instead of overpowering euphoria. For me, as someone who is looking at the sentiments on the markets, a very healthy breeding ground for further rising share prices. There are risks on the stock market as well as in politics. And so we also will look in 4 weeks to see whether Merkel and co. have come closer to the Caribbean island of Jamaica.